What do you do? Well, let's first draw a risk spectrum. So we're going to draw a horizontal line, and on the left side, it's low risk, and on the high end, it's high risk. And we participate all the way across the risk spectrum. We like stuff that I personally like stuff in my portfolio that's low risk, that's just easy cash flow, that's steady Eddie. I know exactly what I'm going to be getting every month. We have a private credit fund, which is a blend of bridge debt, mezz debt, and some pref equity positions that just pays about 11%. That's great, but there's no upside, right? You come up the risk spectrum a little bit, we might participate in, let's say, a multifamily deal. We have a bunch of multifamily in our portfolio. The latest one that we closed is in Tempe. We actually closed on it yesterday as we're speaking. 56 unit project, fairly small, but we're on the GP team of that. So we are part of the general partnership team that brought that deal to life, raised the capital, and we'll be managing it for the next 5 years. There are other larger portfolios, like we brought, I don't know, 10% of the capital stack to a mobile home park fund, which is 12 parks, 2 parking garages, and these parking garages are in major downtown metros. It was $150 million capital stack, right? So we're not that big. We're not going to be taking down that whole thing. And so we partnered, and we're able to get some really juicy economics for our investors on that because of our economies of scale. And then we also run funds for, you aforementioned, there are some deals that have crazy high minimums and they're relationship based. So, I mean, we're attending family office conferences, real estate conferences, oil and gas conferences. We'll be at NAPE this year. And we find those relationships. We build investor friendly structures. We might be able to take a whack at a VC fund that we really like. We did one this past year. Of course, it's on the very high risk end of the spectrum, but we're able to get our investors, let's say, a 10% discount. We do a 90-10 split. So it's net zero to the investor, right? We're getting a 10% discount. We're doing a 90-10 split with the investor. They're even Stevens, but we're going into a fund that has $1 million minimum, and we're chopping it up into 35 or 50K shares for our investors and running all the fund administrative stuff. And we make our money on the upside when they succeed, we succeed, and vice versa.